Ahead of a weekly update on initial jobless claims in the United States, market sentiment improved in light of upbeat data from China. Investors' optimism about easing lockdown measures propelled a rally of stock indexes and commodities. Some states in the United States have already reopened factories. Europe is also ready for cautious lifting of restrictive measures. Several countries are already restarting their economies. However, prospects of the US and global economy remain uncertain. The US dollar is still trading at elevated levels. Futures on the US benchmark indexes are trading firmly higher. Investors hope that the global economy will recover slowly but surely from the coronavirus pandemic. Market participants were encouraged by trade data from China. Exports suddenly surged 3.6% in April on a yearly basis, defying expectations of a 15.7% slump. China's export-reliant economy is the second largest in the world, so recovering China's trade gives a hope that the whole global economy will perk up in the near future. Futures on the Dow Jones climbed 1.37% in the early New York trade to 23,840. Besides, the S&P 500 gained over 1.5%. The US dollar index is trading mainly flat during the whole day, with a minor growth of 0.3%. It opened the New York trade at 100.17, which is almost 10 points higher than its opening price on Monday. Today, the market will get to know data of major importance from the United States, non-farm productivity for the first quarter, and a weekly update on initial unemployment claims. Such data could trigger a short-term correction of the US dollar. At the same time, the data will hardly come as a surprise because market participants expect downbeat figures. Moreover, investors are more interested in the future economic recovery. The US Department of Labor reported that the number of initial jobless claims declined worse than expected by 677,000 last week to 3,169,000. Experts had assumed a decrease of 839,000 to 3 million. Despite fresh disappointing scores, analysts point out the common trend of a decrease in the number of first-time unemployment benefits. This trend is a good sign for the stock market. The highlight of the week is a monthly official report on the US labor market, which is due on Friday. Worse than expected data for April is likely to trigger a new wave of selling in the US stock market. The US dollar could be also hurt because a crater in the labor market could indicate a slowdown in the national economy. Today, the USD CAD pair is trading sideways between short-term support of 1.4015 and resistance of 1.4170. Testing one of the borders will determine a further trajectory of the currency pair for a few days or even weeks ahead. The loonie is braced for a hot day tomorrow. Canada will report on its labor market for April. The unemployment rate climbed to 7.8% in March. In case the jobless rate increases further, the Canadian dollar will lose ground. It could strengthen on condition that the rate declines, which is unlikely. Analysts warn that the unemployment rate in Canada could have jumped to 18% or even 20% last month, which is bearish for the loonie. In any case, the market is set to trade under extreme volatility on Friday, especially the USD CAD pair. To sum up, the USD CAD pair is going to follow the upward trajectory as the rally of oil prices is capped. Today, oil prices gained from 6 to 9%. Brent crude was trading at near $31 a barrel in the evening session, and WTI futures approached $26 a barrel. That's all for today. We keep monitoring the financial market situation. Subscribe to our channel and keep abreast of the latest events. See you soon.